Hi everyone, I want to welcome you, especially to this week's live trading session. All right, my apologies for not coming up live um, immediately. I have a lot of engagements. Okay, so that's why I'm up this time. I'd like you all to share the links to share it out to all of your contacts. Okay, so um, personally sharing out the links already. I'd like you to do that as well. Share the links, share the links, share the links, share the links. Let everyone know that we are live because in these projects, in this particular session, I'm going to be disseminating value. Okay, I'm going to be giving out so much value, and I think that value would be there'll be a lot of benefits for you from the value. You'll be a beneficiary to it, and because of that, you don't need to joke with it. And if there's anybody you know, pro trader, newbie, uh, aspiring trader, people you feel would need these values, you got to let them know that I'm live right now and I've got so much for them. Okay. All right. So I just confirmed that we have good audio. Our audio is okay. Then I'm sharing out the links. That's what I'm doing. So it's important that you're sharing it out so as well. All right, 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 all right. So I'm sharing it on the group. Those of you on the group, you're going to see it now. So should in case you're looking for the link so you can, there's an easy way to get links all by yourself. Okay, so um, in case you don't have it all by yourself, you can take the link from the group, just as I've shared now, and share it out to your contacts. Yeah, I just dropped it on the group. Yeah, you can share it out to your contacts. Let them know that we're live. All right. So quickly, without taking much of your time, I'm going to share my screen with you and just go straight to the charts. Okay. Let's talk from the charts. First of all, I'm going to start discussing the dollar index with you. Yeah, it's been a very beautiful week. Oh, so far. I've told some of you that I've spoken with personally, that we should be expecting a good week, right? It has started already. I'm just so amazed now that my schedule did not allow me catch these moves. First of all, if you look at the dollar index, you find that the dollar index did a massive crash, okay? Massive sell. And that's calling for a buy because if you look closely, you see that it seemed like this demand zone may hold price, even though it's been previously mitigated here, but price is acting like it's currently respecting that zone. So because of that, even though this imbalance is the reason for this massive bearish move, you can see bomb, bomb, bomb. Okay, so that because of that, GU gave a good buy, of which if I was online, if I was available, should have caught the buy. Because this is it for me, based on what I trade. After this structure taking out, this should have been my entry based on what I trade. So I could have caught a decent 44 pips 43 to 44 pips. That's what I should have traded. Everybody has what they trade. In trading, you do what works for you. But based on my strategy, everybody have their strategy. This is what I should have traded. But not I don't have um, any regrets because this is our week. I've been saying it to a lot of people. We have a lot of fundamentals. We've got the Iran war that has led to the crypto tools. Okay, and then it's not as hot as it was at the beginning. We have the resignation of Powell. Then we have what's the last one now? Um, Hantavirus. Hantavirus. So even though I'm among those who do not accept the fact that such viruses are happening by chance, okay, I'm a forex trader, and what I'm interested in is how to make money. One very strange thing about the oh, my screen is not being shared. I'm really sorry about that. Let me do that. Okay, it's being shared, sorry, but it's not on. Sorry. Thank God I saw it immediately. I don't know what I was checking. I now saw it. Sorry. I was showing you the dollar index, right? I talked about the dollar index and I went to GU to show you what I missed in GU today. Okay, so this is JPY. We're not yet on JPY. We're still at dollar index. So my apologies for not checking if you were seeing the screen. So here is the dollar index. Okay. This is the dollar index. And I'm expecting it to give me a buy confirmation. I wouldn't want to sell because of this zone. The zone where the dollar index is a very critical zone. It's supposed to be a buying zone. In fact, it has given me my buy confirmation here, of which this one for me was taken out. This second one was taken out. And if for any reason I find a bullish structure formed here, then I will consider buying the dollar index. Now, we don't buy dollar. For those of you who are not used to what we do, the dollar helps us get a clear direction for the one that we actually trade, which is GBPUSD. Reason is because the dollar is directly proportional to GU, that's to GBP. As you can see, GBPUSD. So that is the Great Britain pounds traded against the US dollar. Now the dollar index is the DXY. So GBPUSD is directly proportional to the dollar index or the dollar, which is also known as USD. Now, because of that, anytime the dollar is selling, the Britain pounds buys. Then anytime, sorry, not the Britain pounds buys, sorry. Anytime the dollar is selling, the Great Britain pounds traded against dollar is selling. Take note of that because that's what we have here. GBP USD. That's the Great Britain pounds against the US dollars sells. Okay. Then anytime the dollar, which is DXY, is buying, sorry, is selling, the Great Britain pounds USD, that's United States dollar, sells. So it happens vice versa because they are directly proportional to each other. So for me to be able to analyze the market excellently, all I need to do is to look at what the dollar index is doing. Once I'm able to understand what it's doing, the opposite of what it's doing is what GBPUSD will do automatically. Same thing applies to JPY. Not everybody will tell you this thing I'm telling you. The reason is because that is not their own strategy. Everybody have their own strategy. This is my own strategy. This is how I trade the market. And it doesn't mean this is my theory. It doesn't mean this is my philosophy. It's just a strategy I discovered. Some of them are gathered from research. Some of them are gathered from different mentorships that I've participated and benefited from. Some of them are gathered from long time observations because I've been in the market for a long time. Some of them are gathered from back testing. Several things forms strategies. It's not just one. A strategy is not a one-way direction. It's formed by several build-ups. So that's why I came about that strategy. But I just wanted you to understand that, so that in case you're new to our videos, you may not be thinking, "Oh, what's this talking about?" So for that sake, if I am able to confirm that the dollar index is buying, I'm going to find sell moves on GU, of which for me to confirm a sell move, first of all, I'm going to find that this low is taken out. Okay, and once this low is taken out, I begin to find my moves. Okay, so let me just give you a short drawing on what I expect to play out. Okay, so once a structure comes like this, takes out this, I'm expecting a pullback, and then I find my sell on GU. If that stays, like I said, if dollar index sells, okay. Now, if the dollar index, sorry, if it buys, sorry, I'm going to send you, right? Because this is the sell, this is bearish. Now, if the dollar index buys, let's go back to the dollar index. For any reason it buys, sorry, if it sells, sorry, I talked about if it buys, then I'm going to send you. So for if it buys, let's look at it. If it sells, okay, sorry, if it buys, what's happening to me? I think I need some rest. All right, if it buys, how are we going to know that it's buying? It's going to take out this low at least. It's taking out these ones already. So if it takes out this low, for instance, something like this, it's going to form, of course, bearish structures. They're going to retrace. Once it takes out this low, gives me a retracement, it means we're going boom, long. All right, so that's what I'll be waiting to see if it buys. So let me now show you if it sells. If it's going to sell, then I'll wait for it to take out probably this. Okay, once it takes out this, I'm expecting something like this. Take it out, give a retracement, and we go boom. Yeah, but the chances for it to buy is slim, very small. Reason is because it has tested this zone multiple times. Tested here, first of all, this looks like sweep of liquidity. Tested again, tested again, tested again, tested again. It's testing again. So if price could hold these multiple times, then that's a psychological level. That's a key level, very delicate level, very important. For those of you who trade resistance and support, you can call it a strong. Why am I always wanting to remember what they call support? Because I don't trade it. Maybe that's the reason. So let's just check if that's a support, right? Or a resistance. So we learn every day, right? Because I don't use it, yeah, so we can call it support. Because resistance is up, support is down. So I don't want to say the wrong thing, especially the fact that this is a class. Okay, so if this place holds price, then you people that trade resistance support will say it's a strong support zone. Now, don't get me wrong. For those of you I've told I don't trade resistance support, the reason I don't trade resistance and support is because resistance and support resistance and support is the reason I don't trade resistance support is because resistance support is not used to be the common what's it called terms in trading. In fact, that's what the layman understands. The one who just joins trading, it's like the first language, it's one of the first language I understood, and it became liquidity. It looks like the big players, the market manipulators, understood it very perfectly, such that what they now do is take, for instance, I told you this is a strong support, right? So what the market movers do, let me just give you this secret so you can learn it today, is before they buy in the market, they already know that there are going to be a lot of stop orders here. So what they do is that they come take out all your stop losses and then go. So resistance support is a trap for me. And my strategy is spotting the traps. So in the market, I spot traps. That's my strategy. That's what helps me in the market. I spot traps, I spot liquidities, I spot stop losses. So before I go into the market, I wait for all your stop losses to be taken out. So, and what we call such move There's a term for it. It's called smart money moves. So sometimes you hear people say when the smart money enters into the market. Okay, so smart money moves, and then another terminology for it is the big players move, because it's actually the market movers that do that. I and you don't move the market. We're retail traders. Our money is not enough to do that. So the big players are those people that come into the market with huge sum, the commercial banks, the financial institutions, the big guys that come into the market with trillions and trillions of dollars, and all the big monies they come in with. Could be dollars, could be different currencies, whatever it is, but they come in with big money. Just establish that as a fact. They are the ones that determine where the market goes. If they come and say market should buy today, to buy. So, but what they do is that they don't just say market should buy. They come and take out your stop orders, because there's such a thing as liquidity in the market, and that's where money is. So the fact that this place is testing price multiple times tells you that, let me show you, tells you that there's money here. Okay, it tells you that there's money here. Oh, so this cycle will not draw multiple times. Okay, let me use Eclipse. It shows you that there's money here. Okay, it also shows you that there's money here. Eclipse does not draw multiple times. I just wanted to just draw liquidity spots for you, but I don't know what's wrong with these tools. These tools, they're not giving me one. Let me use my usual rectangle. So now will give me multiple times. It shows you that there's money here. Okay, it shows you that there's money here. All right. Why? Because there's a lot of people who want to trade all these touches. Say, double touch, let's go. Double touch, let's go. If this place is holding price, let's go. So all these people will be putting their stop losses around here. And because of that, what the big players will do is they will not let the price go up immediately. They must do a V shape, which is our liquidity shape. They must do a V-shaped move, and that V-shaped move is going to come like this. It will be like price wants to go up. You will not see, hey, price is already going on. It will now come back, do something like this, a V-shaped move before it moves up. That's what we call liquidity sweep. Okay, so it would have taken out all these people's stop loss, and that's where money is. So the big players do this, and that's where they get most of the money, from people's stop orders. And most brokers, especially manipulating brokers, also take advantage of that to make some money for themselves. So the same thing is applied here. If you look, you see this is a liquidity sweep. Look at it, V-shape, pushed up, swiped down, came like this and pushed up. So you can look at it in two ways. You can look at it like this. Okay, look at it like this, and you can look at it like this. So you can leave all these ones, look at it like this, look at it like this, right? So this is liquidity sweep. So all those people that say let's buy from here, they are taking out. So that's why I don't trade support and resistance. It doesn't support my strategy. Now, what supports my strategy is what I call supply and demand. Now, why is supply? The supply and demand will have also casted, because it's also another very popular term when it comes to uh, when it comes to popularity of terms in trading. Sorry, I was just trying to respond to a message. So when it comes to popularity in terminologies, supply and demand is also very old, just like so that means the market movers can also manipulate supply. So you see why your strategy must be your edge. As I feel sorry for those who are saying we're smart money traders, the SMC traders. And what you don't know is that SMC traders also have their own liquidity that they put in the market. So don't just have your discrete strategy. that gives you your edge. You don't need to say I'm this, I'm that. Where is your edge? Because that thing that you are claiming to be with many millions of people and other people is actually what the big players will use against you in the market. So when it comes to supply and demand, the reason why supply and demand still helps my strategy is because if you understand what demand zones are, of course, this is a demand zone from 4 hour time frame, but from this 15 minutes time frame, this is also a demand zone. What are demand zones? Demand zones are areas where price gained and pushed momentum. So every time you find a momentum in the market, that place price was coming for before the momentum is a demand zone. Take for instance, this is a strong momentum. Why? Because price, you can see it bought obviously. You can't really call this momentum. You can't really call this momentum because it was struggling to buy. But this one bought massively. That's one key because there are many other keys to demand. So demand and supply are just opposite. So when you say demand, it means upward. Supply means downward. So for the so I will not separate, I will not explain this one, explain it down. So and you just take the opposites of the demand to fit your knowledge on supply. So when it now comes to the two laws, the first law is the momentum. You must see the momentum. The second law that helps you confirm that that is truly a demand zone, because there are zones that look like demand zone, but it's not truly the demand zone. And if you trade it as a demand zone, it's fail you because it's a fake demand zone. Okay. For it to be confirmed as an original demand zone, another law is that there must be a break of structure like this. So if you look, you see this one did not break structure, so that means price was struggling. So not only was this momentum very strong, it broke structure. So it was strong enough to swipe all the money orders because every liquidity side is money. It was able to take out all these people's money. Why have I forgotten? Oh shit. I forgot. I have a drawing for money that's for liquidity. I've not been using it in a long time because I've not been drawing so much on the chart lately. So this is it. Is a just a line. Then I just put dollar. So this is liquidity. There are liquidities here. If you understand trading, there are liquidities here. So every highs have money. Every lows have money. Okay. Then every place where price has maybe consolidated for a while, like there's a consolidation here, there are consolidations here, all those areas have money, or either above them or beneath them. If you're looking it for the buy side, it's beneath them. If you're looking on the outside, because it's what happens down that pushes price up. So because this demand zone was strong enough to break this structure and push price up, I have a label for break of structure. Sorry, I've not been using these things for long, but for the sake of this class, let me just put it. So because price will break um, these, because price broke this structure and pushed up, it means that this demand, sorry, yeah, demand zone is strong, it's valid, it has power. And because of that, there will be money under here because every demand zone becomes a key zone. It becomes a psychological level. It becomes an important zone because the market movers, the financial institutions, they already know that something happened there historically. So in the nearest future, while they are predicting or they are moving the market the way they move it, they already know they're going to do something there. So that's why I trade it. So I look out for demand zones. Then I don't just trade demand zones. I look out for liquidity on demand zones. You see now? So if I would trade resistance and support for any reasons, I will look out for the liquidity. But that still doesn't fit what I trade because resistance and support looks more like a thin line. Meanwhile, demand and supply is a wider zone. And this market don't move on thin line. They move on wider zones. So I prefer supply zones. So I map out my supply zone like this one you're seeing was mapped out from the 4 hour time frame. I mapped it out. See it here. You can see this is my demand zone mapped out. You can see another one here mapped out just beneath this one. Okay. And when price was crashing, I was expecting that once price get there, I'll be expecting what price would do. What did he do? Price mitigated that zone. So you would have thought a mitigated supply zone will not hold price again. But look at price coming to stay there again, because it's a key zone. So that means this particular demand zone would hold price most likely, and maybe a strong reversal zone. But take note, it will not price will not just reverse. It's going to do a lot of manipulation because you need to take out a lot of people. So that's why I am trading demand and supply, but I'm not entering the market from the demand and supply zones. I wait for certain key indicator factors, which is my strategy, before I go in. So when you see that I'm not talking about support and resistance, this is the reason. So that's to help somebody. I'm sure that will help someone to learn something today. But quickly, let's go to dollar and GPP. I've already told you what GPP is, right? So let's go straight to JPY baskets and round it up. So JPY basket has massively crashed over time. Okay, so and spiked up. I didn't like this spike, it was too long. I didn't understand this one. It's not giving me the usual vibes. So I'm not used to those kind of spikes. But the only thing I can do to trade this is just to map out my zones, like I always tell you. So this is the only um, demand zone here. I can label it. Okay, demand. I have that. I hardly use it because I see the charts a lot. There's another zone here that triggered price up that's been mitigated, so it will not be active again because it's been mitigated. Is the fair value gap. Of course, you know what fair value gap is. If you don't know, see some of my videos, it will help you. So it's the fair value gap which help price, but it's been mitigated, so it's not useful again. But this demand zone has not yet been mitigated, so it will definitely hold price if price gets there. All right. So except it gets mitigated, then we can say it's no longer valid. But until then, price came here, mitigated this one. That's the supply zone on the upside. Okay. After mitigating it, it had taken out a lot of structures. So it bought from this POI, this point of interest, came here. So price is currently on a bearish move. So if I want to trade this, I'll trade this bearish. All I need is to get bearish confirmation. Excuse me, but take note, don't sell on demand zones. So bearish confirmation, but this is a demand zone on the 15 minutes time frame. If you look very well, it's an active demand zone because this is the zone that pushed price up here and broke up all the structures. Very strong demand zone, and that's where price is. So I will not sell there. So even if I will sell, I'll wait for price to buy a little bit and give me a sell before I sell. That's how I trade. Okay, I trade smart moves. Okay, so if that happens, then I could find sell. But for buy, I will not buy yet until I see a major low taken out, maybe like this. If this low is taken out, I can consider a buy. But that will be on a lower time frame, which is the 5 minutes time frame. So on this 5 minutes time frame, I'm just going to buy maybe from this zone to this zone. Just short pips because that's a short move. That's scalp. Either scalp, you can call it scalp, or you can call it short move. That's 19 pips. I can maximize that and use it to make a lot of profit for myself. And in that case, it means I will be selling. Remember, it's not the JPY that we buy. It's the JPY we use to do the analysis. What we buy is the GBP JPY, which is the Great Britain pounds against Japanese yen. So once that is confirmed for a sell, I will buy JPY. Someone will say, "Oh, it's buying, let's go." No, we don't trade like that. We don't chase candles. So you wait until those things I explained plays out in the chart. All right, let's go straight to CFDs. Let's start off with silver. Wow, this is good. It's currently on my supply zone. You can see I have a zone here. This is good. I didn't see this early. Probably would have bought. So, but it's not a regret to look very well. We have something to do here. We have a good zone here, right? Which is what we can call it word demand. Then we have another zone, very good one again. We call it what? FVG. That's the fair value gap. So what do we wait for? We go to our entry time frame. So this strategy is so simple, so easy if you master it. You go to your entry time frame. What do? You do a lot of waiting on this strategy. You wait. When price get in, you wait for new structures. You get. All right. So for this time frame, which is the 5 minutes, 15 minutes time frame, you don't need to wait for 15-minute structure because it's been formed already. This is the 15-minute structure. It has breaking structure already on the upside, showing that this is a bullish market. Okay. So what you need is the internal trend confirmation, which is on a lower time frame to 15 minutes, and that is the 5 minutes. So when the price comes down, takes out a major low, gives a break of structure, then you can buy just up to this point. That's what I'll be doing with silver. Then I'll do repeat the same thing with gold because silver and gold are brothers. So I'll go to Ethereum now, give you Ethereum. I'll repeat what I'll do in Ethereum on Bitcoin because Ethereum and Bitcoin are brothers. They have similar moves. Just as GU, EU are brothers, EU, AU are brothers, NU. All these things I'm telling you helps you now. You just master the market if you understand trading. And this is the 4-hour time frame for Ethereum. It's been manipulative, very manipulative. What's the most recent break of structure externally is this, but it has taken out this has taken out this low, so it should be this. So Ethereum is bearish on overall, but bullish on internal. So in that case, the market is a little bit indecisive. So if I go bearish, I'm correct. If I go bullish, I'm correct because market is indecisive, probably swinging. But I must get my basic confirmation first. If I get a bearish confirmation here, I go bearish. If I get a bullish confirmation, which is taken out of this high, I go bullish. That is on Ethereum. Okay, so Tesla. Those of you who I didn't take this, those of you who are understanding what the hantavirus is doing, you should know that every stock is going to buy this period. So I expect Tesla to buy. Okay, so you can see, boom, boom, hantavirus at work. So what we're going to do is we're going to pay attention to the retracements. This is the first demand zone. Then this is the fair value gap. Okay, for this one, the chart is a little bit strange. There's no fair value gap there. So we're going to look closely. So there are two things we can do here. We can counter trade. That's catching some bearish move to this point, or we can wait for price to do what it wants to do, then we buy. That's for Tesla. So stay active. I'm going to give you updates on that. Then we're done with stocks. Let's look at US 30. All right, so the US 30 is one of the good commodity that has been doing very well this period. Okay, because it's not really affected by most of the hazardous things that have been happening around the world. You can see, excuse me, it's been giving clear charts, even though this failed. This looks failed. But that's still a buy. So I'm going to buy the US 30 once I find a buy. Okay. I think the US 30 is in a buy zone. So US 30 could buy from here to this be mitigated. Let's just say from here to this tip. That's what US 30 may do. But to get that, I'll go down to my smaller time frame. So you see this, boom, boom, it's failing. I'll look out for more internal structures before I confirm that. So that's what I'm seeing on US 30. So I'm going to confirm any updates on the various groups. Excuse me, whether the VIP or the free. All right, so this is volatility 25. It's bearish. Okay, I'm just going to wait for what price will do when it gets back here. So here is the supply zone, and in between it is fair value gap. So if I find what price is going to do, if ever long I will decide what to do there. So I'll wait for price to get in those key zones. So if you go to the ND time frame, you see it clearer. So I'm going to expect to see some beautiful structures formed here. Then I'm going to sell volatility 25. Now this is synthetic, in case you don't know what I'm talking about. So we have jump 25, which is the final one for the free community. For the VIP, I'm going to talk boom 500, crash 500, and the rest of them during the VIP sessions. So this is jump 25 consolidating its efforts. So I'll find bullish entries on jump 25. All right, so once I find bullish entries on jump 25, I'll buy. Take, for instance, I'm going to expect that price should take out this. If price takes out that, I'll look for my buy on jump 25. Okay, so this is all I can take. I'm feeling a bit sleepy, not really rested in this. So my apologies for how I'm sounding a little bit sleepy and I need some rest. So, but that's all I can take for today. Now the sleep did not affect the class. So if you notice, those of you that came in, I spoke a lot on supply and demand, and it's not usually what I do, okay, because I have videos on that. But I spoke on it on this because there's someone who needs it, and I believe it's helping the person already. All right, so stay active on the group. I'm going to be giving updates when it's time to take a trade. Then get ready for all we're going to be doing. See you soon. Make sure you make money this week.